Well, I think what we're likely to see is a quarter and a guide that are only in line, and I think a stock that's been trading like it expects more than that. And I do think the quarter itself, the January quarter, was shut down. The government was shut down for most of the quarter, just reopened at the very, very end. I do think we're going to see an impact, and that will take the quarter from a typical Cisco beat to only in line.
Okay.
Of course, it's good that that issue's gone for the guide, but we have some other issues that make me cautious.
I mean, the softening of the data center is one, and you point out that Juniper, F5, its competitors have pointed to the weakness. We heard from the weakness from the chip sector that supplies the chips to the data center. And so how bad is this going to be? And is this going to be a lasting impact, or is it going to be a short-term hit?
Yeah, well, I think the data center pause is a short-term hit. If we look at the Cisco stock in a bigger picture, over the last 6 months, the stock's way outperformed the indexes. I think in the next 6 months, it's probably going to underperform a little bit. And these issues that we're talking about, I mean, look, the last quarter that they reported, fiscal 1Q, which was October 2018, was an almost perfect quarter with 8% year-over-year order growth, 15% enterprise growth. Things have gotten a little bit worse since then, and I think we're going to see that in the quarter and the guide, and we're due for a little bit of stock underperformance.
How much impact have we seen from the trade war? A shift to other gear makers, for instance, that may not have raised prices because of the tariffs?
Right. Well, I think the more worrisome part of the tariffs is what could happen in front of us, and we've seen Chuck Robbins, the CEO of Cisco, out very aggressively trying to talk, hoping that these tariffs aren't going to go into effect, because as he says, it's going to affect everybody if it happens. We've seen a little bit of a gross margin impact so far. We haven't seen much of a demand impact, but it is the uncertainty. It is the uncertainty that's created by this issue being out there, I think, which is going to lead this order rate for this company, which again was 8% year-over-year last quarter, very, very strong, and had accelerated for 6 straight quarters. And we're going to start to see that decelerate here. And again, that's what makes me a little bit cautious on the stock.
Mike, what would it mean if the U.S. does come out with this ban on Huawei equipment for telecoms, or is that already priced into the stock?
Well, my general take on that, and that's a great question, is that is good for the people that make systems, or the companies that make systems like Cisco, and it's negative for the companies that sell components like the semiconductor companies and the optical component companies. So for a company like Cisco, the trouble, as 5G decisions are made, this is actually working in their favor. It's working in the favor of Cisco. It's working in the favor of Nokia, of Ciena, of the box makers. But it does have me extremely worried about the optical component guys.
In terms of Cisco, what's your overall take? I mean, if you're to believe that there's certain short-term factors that could hit guidance, could hit the current quarter, such as the shutdown and perhaps tariffs, if you said all that goes away tomorrow, Mike, what would your outlook be on the stock?
Well, fundamentally positive. Fundamentally, we've got a pretty good product cycle. We fundamentally have a really good macro. I am a little bit worried that it was a peak macro last quarter. The issue here is we just have to find the right growth rate. It was above that 8% last quarter was too high. If we settle down to a nice 4 or 5% growth rate, I'm positive. I'd be positive on Cisco. I'm not telling anybody to short it here with this little bit of weakness I'm expecting, although I do expect some of the more fast money funds will.